Well, it's great to have you with us, and obviously it's been a pretty exciting year in the stock market with all-time highs in the Canadian and U.S. equity landscape, raising a lot of questions after a strong earnings season. What happens next? Well, when you look at the charts right now, one chief technical strategist believes that there could continue to be some bull market action, but with a caveat. Adam Turnquist is chief technical strategist with LPL Financial, and he kicks off our programming at this hour. Adam, it's great to have you with us. Thanks very much for your time.
Hey, good morning, John. Thanks for having me.
So obviously we're starting to get ready for fall action. You know, it's obviously still been a fairly positive mood in the markets, but now that we're moving our way through earnings season, I think people are looking at all the different catalysts out there. When you look at the trends in the markets themselves and the chart action, what are you seeing right now?
Well, you nailed it. What happens next? That's the million-dollar question as we go into this fall. We had a great earnings season for the S&P 500, better than expected by a long shot. A lot of corporate America navigating these tariffs quite well for now. But when we look at the charts, we're big believers in the longer-term bull market trend. Up and to the right, that's been the story for this bull market. But of course, as strategists, we're trying to figure out those inflection points and potential tactical opportunities. And when we look at the market right now, we would argue we're a little bit overbought. The S&P 500, for example, trading at nearly a 10% premium to its longer-term 200-day moving average. We think of that as a rubber band. Price generally only stretches so far above that rubber band before you either get a pause or a pullback. You take that into the seasonal factor of September, the worst month for the S&P 500. We've had some pretty bad Septembers over the years. And then just some divergences that we're seeing between market breadth and price action. So participation's been good, but not great in the context of a bull market that's continuing to print highs as we saw last week.
Okay, so it sounds like you are preparing for some possible turbulence, but nothing so far that would sort of kick us off this bull run full steam.
Right. I think for investors sitting out there with cash, the playbook right now is to buy the dips, and where those dips may land, technicals tell us maybe we get back to the February highs around 61.44 for the S&P 500, or maybe even the 200-day moving average. That's around 59.25. So those drawdowns, 5 to 9%, are typical in a bull market, typical in the second half when you backtest those type of sell-offs. And I do think it is a buy the dip moment when you look at that longer term structure of this bull market. We have cyclical leadership, we have a resiliency with earnings. I think the macro environment maybe arguably improving with the Fed set to start cutting rates in September. Interest rates on the long end have been contained for the most part as well.
And is there anything history has taught you about the biggest catalysts for movement once you've had a really strong one? We've talked sort of in generalities around earnings. We've talked in generality about the economy. Then you've got geopolitical factors. And then you've got a market that has put so much money to work in the future, you know, AI and all the AI ecosystem. You know, if anything were to sort of change that storyline, maybe that would be a catalyst to kind of a lot of people thinking back to the dot-com boom and bust. So what are the kinds of things to watch for in an extended market run that maybe start to change the game?
Right. When you look at just the history of the rally we've witnessed since April, of course, that was underpinned by the tariff pivot and the pause. We were up 20+% in 3 months. And there's a few occurrences where that's happened over history. It's pretty rare, of course, that type of rally, but you tend to get a pause or a pullback during the period we're in right about now. So that would suggest maybe 1 to 2%, at least history, and then you have longer term momentum continuing. So maybe some short-term pain ahead of some long-term gains. And certainly when you think about just how crowded the AI trade is, that's one of the most crowded trades according to some of the data that we look at. Now, that doesn't mean it's over. So we know overbought conditions and overvaluations can continue for extended periods, but when they do unwind, it tends to be sharp. That's not our call right now. We think there's still runway here for AI, but maybe some breathing room here for the broader market in general.
Yeah, and I'm glad you mentioned the broader market because it's been a year that has captured investor attention globally. We mentioned the Canadian stock market's at an all-time high. I think when we're in these kind of moments as well, you try to get a feel for what the market appetite is for not just the biggest companies, but some of the smaller companies as well. So if we extend out beyond the S&P, is there anything that stands out to you right now?
Right now, we're looking at small caps. They've lagged, and they've lagged for years now against the larger cap segment, which of course is powered by those mega cap names, that big tech trade. Small caps, I think there's a window here for a bit of a catch-up rally. Now, on a macro or fundamental level, they don't really hold a candle to large caps when you look at earnings growth and margins, but they are relatively cheap compared to the broader market. There seems to be some rotational pressure and also positioning. There's a large short interest in small caps, so as they start to work higher, that puts pressure on those short positions to cover. So I do think there's a small chance here we could have some small cap rallies that maybe outperform the larger cap S&P 500, for example.
Okay, helpful context, Adam. Appreciate the breakdown. We'll be watching closely on the market moves from here. Adam Turnquist is Chief Technical Strategist, LPL Financial.